talked about,
Oh,
you know, the energy crisis in Europe, and
oh yeah,
I think we were onto something important with that. You know, I think that's kind of like, in my opinion, the most important story on the macro is what's going on there and like the ramifications that's going on there because on one level it's like kind of already priced into the market with energy prices, but on another level it's like not really priced in the market because like not many people are talking about it. And the one development that happened between now and the last time we spoke was I started to see like news about like um, Western entities, NATO countries imposing price restrictions on oil imports from Russia and other allies of Russia. And to me, that's like the canary in the coal mine. You know, like I've
yeah,
always had that on my radar. Like if you see price controls, like red alert, right? Like
yeah. I
that
mean,
is
even all the matter about I mean, even before Draghi in our own country was kind of uh, put to the put to the bench, he was one of the main advocate for a price cap on gas. And I was always like, no, man, you cannot, you cannot put a price cap on whatever you. If you start to put price cap on commodities, that's the point of no return because you're actually cutting off the market, and people won't be willing to sell that commodity to you, and it's going to make the thing even worse because if you think you have inflation now, if you put a price cap on it, you're going to have a lack of distributor and sellers, and the inflation problem is going to be even worse. So don't do that, please.
yeah. I
So
cannot emphasize how big of a deal that is. That is like if there's anything I emphasize, it's that like it is the canary in the coal mine. Now, these are things they're talking about and haven't actually imposed. But if like you ever see an official statement that they're doing that officially, like that is, you need to, you know,
you're going to be fucked up.
yeah, it's things are gonna get crazy volatile. Um,
Yeah, I
yeah,
mean, just another thing which I think to some degrees actually it's way more important than gas because at least temporarily, right? Because right now it's still the summer, so it's pretty warm outside. We don't actually need to warm our houses up, but it's just a simple detail, right? I went to the mall this morning, right, and I was as usual trying to buy a cred. I What is that in English? Uh, it's not like a barrel. It's not like a crater. A piece of bottle of water. So
yeah,
it's six pack of,
yeah,
water bottles, right? And I wasn't able to find one. I mean, usually I was used to buy the same old one with the same old price, and at a point, I was just realizing, it's not available anymore, and the only things that are available is the other brand of water, which is like double the price, and I was like, what the fuck is going on? I mean, it's like water. What I mean, actual water is actually doubled up in price in the last 2 weeks. I mean, what the fuck is going on? It was like
yeah,
maybe it's not. It's. I mean, apparently it's not such a big deal because like if you're paying like a bottle of water, which is like 2 liters. I don't know how much is it in American terms because I know you do use gallons or whatever you,
yeah,
but it was like basically considering the availability at the mall, price of water had just gone up, 100% in 2 weeks. And that's fucking crazy because
yeah, man.
people might not see
Yeah,
that now, but at a point they will see that.
Well, I think okay, so I think the important part, like kind of tying into this narrative and what's changing right now, in my opinion, and this is why I think, people always want a reason why the market is rallying or doing anything it's doing. And
Oh,
I'm not going to, I mean, really the reason why the market's rallying is because everybody was short. And that's really the only reason. There's no other reason other than that, right? That's the only reason. But what I do think is changing on the narrative is that I think the market thought before that inflation was transitory, right? And that was the narrative that they had, that the Fed was saying, right? And people believed it. And then, of course, that narrative went away, but they still thought it was transitory because they thought the Fed was going to stop it, right? Or they thought central banks were going to stop it. And I think that changed or has changed recently. I think the market is, and people in general are starting to understand that it's not going away. It's not changing. It's not going down, right? This is something that we're going to have to live with over the course of our lives. And I think that is significant, right? I think that definitely changes your behavior because on a very like fundamental level, think about if you're a consumer, right, and you believe that
yeah,
either inflation is transitory or the central bank will bring it down soon, then your spending behavior is different, right? You wait, right?
yeah.
You wait
Um,
to buy, but if you understand that it's not going away, then your
uh,
behavior is different. You don't wait. You buy as much as you need right now before everything goes up in price.
which is, I mean, which is inflationary in itself by nature, right?
Yeah, yeah, exactly.
It's some sort of a inflationary
I think
spiral,
I think that's why
as
you
they
saw
call it.
Amazon's earnings be so good. I think that's reflected in Amazon's earnings like that because
You
it
know,
doesn't make sense otherwise. Like,
I, conceptually, I would agree on that. I guess the only problem I'm seeing opposing that narrative is something like, if you look at real wages, or if you look at uh, the employment rate, because at the point I think inflation can keep up until the point people actually have the money to to chase prices. But even if we are entering a multi-decade period of higher inflation, it's going to have its own downturn, right? So right now, I think a lot of people, if we got an inflationary spike, even more than what we already had, I think a lot of people will be squeezed. And there are sectors in the economy like the energy or food, and in those sectors, inflation it's going to be sticky. But if you look at something like the retail sales, right? If you look at the reports that Walmart or other uh, great companies like that, retail companies put out, it's like they were signaling that consumers' behavior is actually changing. And I think it's because when you got more money to be put on, housing costs, energy costs, and what have you, you have less money to be, you know, put on discretionary spending. So I think a little fraction of the CPI might be reduced, but the sticky part of it, like food and energy, will be sticky, right?
yeah, that's probably what will happen, right? Like they'll just recategorize CPI, like Paulo said, to not include the things with actual demand, and then have it calculate
Exactly.
things, the discretionary things that nobody
Ju-
actually needs or wants,
just
and then
because it
yeah,
fits the narrative of the Fed being able to tame down inflation. Yeah.
yeah. I don't know if you're familiar with Lynn Alden, but she like posts some good stuff,
Yeah,
and
I know her.
yeah,
I love
she
her. I mean, I don't agree with everything she says, but she's brilliant. Absolutely brilliant.
yeah she was posting some interesting stuff. Like she was posting a chart showing that CPI adjusted wages or inflation adjusted wages are actually going down or just starting to go down, breaking structure to the
Yeah.
downside. And
Yeah.
the Fed does this thing where if when something's initially starting to have a phase shift, they deny it, right? Because they want to have a good image. But really
exactly.
wages are going down. They're like starting to sink, inflation adjusted wages. So that's
Yeah,
another thing is like
that's
nominal wages are up, but inflation adjusted wages are way down. So it's like
yeah. I mean, it's another point of that politics I don't really like, because you can, I mean, you can bring on two different data, right? But if you don't compare them the right way, it's just meaningless.
yeah,
So I mean, let's say I made like $200 more this month in my, on my paycheck, okay, but at the same time inflation is 10%, so I'm actually losing money because my purchasing power is going down.
yeah.
So who gives a fuck?
The other thing she was saying was that she made an interesting point that I'd never heard before. Is that as the dollar strengthens, there's an incredible amount of pressure on dollar denominated equities, which is an interesting concept because you've talked about how like the euro dollar market and the when the dollar tightens, people need dollars to pay their liabilities. But
Yeah,
what
in
the
relative terms, yeah.
another factor of that is that like a lot of countries and foreigners have huge supplies of U.S. equities. That's like their biggest, investment in equities. And so when they need to, get dollars, they sell their U.S. equities.
Or treasuries, yeah.
Yeah, or treasuries. Yeah, but like the Swiss National Bank, the central bank of Switzerland, they have like a huge amount of U.S. equities on their balance sheet, like an incredible.
That's a great, yeah, that's a great point. I was talking to a friend I have in Switzerland like this morning, and he was pretty worried about that. I mean, it was like, I'm working for a company. They are paying me in dollars, actually USDC, because he's working for one of these crypto industries, and he was pretty worried because he had to translate those USDC first into euros and then back into dollars. So it was just I guess, a matter of arbitrages, and he was actually losing a lot of money in the process,
Yeah,
only because the Switzerland National Bank, it's actually running this policy right now, which to some extent I don't think. I mean, I think they've been pretty smart to some extent, because they bought up a lot of U.S. assets. And now, if they really need that, if they need liquidity, they can liquidate those assets. But at the same time, that would bring the U.S. market equities down. So it's like a cat chasing his own tail.
yeah. I mean, the point of it is just there's a lot of headwinds against equities right now, and for a number of reasons, right? That reason right
Yeah,
there. Inflation just crushes them on both sides of the margin. Their base commodities go up, their base costs go up, and also consumer demand goes down, right?
the financing costs
Their
go up.
ability to
Yeah,
raise debt. Yeah, it's just bad for them. Um, so like but and I think another thing about the inflation thing is that people don't understand is like they kind of talk about inflation as if it's like from a demand side, right? If you think about demand and supply relationships, but
yeah.
it's
It's
really a supply side issue. And
exactly.
and
Yeah,
I think
yeah.
the
That's
energy
a great
crisis
point.
helps you understand that, right? That like, you
Yeah.
know,
Yeah, I mean, it's like people always refer to inflation like it's a problem of a lot of people, asking for the same stuff, and they're all beating up the market, but it's not. I mean, it's a mutual relationship, right? It's not just one part of the equation. You need to take into consideration the other side of the equation, which is supply. So, and I guess that to some extent, that's what the Fed is trying to do. They are actually trying to tame demand, because they know they don't have any tools to actually intervene on supply.
yeah,
So
I
the
mean,
only
yeah,
the only thing you can do is that.
yeah, but again, that doesn't work for
I mean,
food and energy, but yeah,
exactly, because you always need food and energy. So
Yeah, I think it's
you cannot solve all these bottlenecks just raising rates. It doesn't matter.
yeah, it's like energy is like a check. It forces the central banks to confront reality, right? They can bend reality,
Yeah,
distort time with the way they manipulate interest rates, but then they come in like into contact with the energy market, and the energy market reflects reality, right? Like a good example
yeah,
is like every barrel of oil, right, takes 25,000 hours to produce of human
yeah.
hours, and that's a component of time and work that the fiat system doesn't appreciate, right? And it's like
And not
coming,
take into account that.
yeah. I mean, well, yeah. It's like suddenly their policies come into contact with reality, and you know, it's bad. And
But
I don't think people appreciate that there is a supply
but
shortage of
y-
energy, and that
you
is
know,
like a real issue.
I think what's the problem is that I do remember I was watching one of the F1C meeting they had. I think it was 3 4 months ago, and I mean you had Jay Powell himself, on a press conference, actually stating in front of journalists that they don't have anything to do with supply issues. And
Sorry, with what?
I know
With
it
the
was like he was admitting that there are supplies issues, supplies bottlenecks and what have you, and he was actually stating that the Fed cannot actually take care of them because they don't have any tools to intervene on supplies bottlenecks. And I think it that statement actually flew in the face of a lot of people because a lot of people maybe they weren't paying attention, but it was actually a pretty well set statement, like we don't have the tool to fight this. We can do whatever we can do the best we can, but at a point there are dynamics in the market right now and we are not prepared, we don't have the tool, we are not equipped to fight those things. So be ready for some times of pain. I don't
yeah,
know if the general people actually caught that message right there, but I don't think they did.
maybe I can frame it a different way. So, right, if when we say wealthy, sometimes we're referring to a number, but what we're really referring to is our ability to lay claim on goods and services, right? So
Yeah,
that's really what we mean by being wealthy. Well, if there's a shortage of, the goods and services that we want, then as a whole we're going to become less wealthy. You know,
oh yeah,
maybe not forever, but at least temporarily. And
it's
but the unit of currency will increase relative to that shortage of goods and services. So, you know,
yeah, and I guess what they define as the psychological dynamic on the market. As they call it, the wealth effect, right? I
yeah,
mean, if you see that all your investments are going down and actually losing money, you're feeling less wealthy, right?
yeah,
So
yeah,
naturally, you are going to be brought to spend less. If you spend less, less consumed, less demand, lower price.
yeah. Well, that ties into another idea. Is like a lot of people, they'll say that the Fed doesn't care about the stock market, that all they care about is the bond market, and that's just not
Don't
true.
know.
The
I
stock
don't
market
know.
drives GDP, and
Yeah, the problem with
yeah.
with a heavily financialized economy like you have, you cannot discard the stock market.
But I remember reading a story somewhere that was like the uh, the stock market uh, drives like 60% of the GDP, So like
Yeah.
if you let the stock market fall, then your GDP number falls off a cliff, and what they really care about is the debt to GDP. So I mean,
Yeah,
it's
well, but
yeah,
if your GDP is falling, that means that even your debt to GDP ratio is going to fall. So you're going to be good
yeah,
somehow, you know.
yeah, exactly. Yeah, I mean, I don't know. I think it's not clear how this stuff all plays out. I mean, yeah,
I
I'm not.
think again, it plays out, in the old-fashioned way, which is kicking the can down the road a little bit more.
Yeah, but I think this is different. I think the energy crisis brings things to a head. Um, I think, I think the can stops here. Really.
Yeah, I mean, I actually think it's gonna get even worse than that because, again, as I was saying before, we are still in the summer. I don't know. I'm looking at the places where I'm living right now, but even if you look at Germany, they are really, really worried about stuff right now because, honestly, they are actually facing a problem. They don't know how to keep their own people warmed in winter.
Yeah.
And it's not just a practical problem. It's also a political problem because if you got an entire nation which cannot afford to be warm in winter, I mean that's the kind of thing which bring to social unrest. They are really concerned about that right now. And the situation with Russia, again, shouting up the Nord Stream again due to maintenance. Yeah, I don't know. It's really shady. I'm not sure what's going on, but doesn't feel good.
Yeah, I mean, it's pretty clear to me that the way this plays out geopolitically is that the countries or nations with the most energy are going to be the strongest. So if you don't have energy as a country, you're fucked. Um, I know that sounds like
Yeah,
an
so we are fucked as a
oversimplification,
continent. Yeah.
but I know it sounds like an oversimplification, and of course it's a little more nuanced than that. But on a broad level, I think that's just how it'll play out. And you mentioned that Italy had stocked up on energy, so I mean, I'm sure they got
I mean,
have their debt issues, but
if you
at least you have
well,
energy, So
well, if you wanna kind of trust the government statements, they say we are above 80% of the gas stock we would need to survive the winter.
I mean, if you think about it, though, that actually may have been a good trade, right? I mean, if your currency is debasing, then a good trade is to borrow money and buy energy.
Yeah,
I mean,
exactly. And so, I don't know if our own politicians are going to be able or clever enough to do that, to put that out, but,
well, they
you
may
know,
not have been
at
smart
least,
enough to do that on purpose, but they may have done it on accident. And if they
yeah,
even if they did it
but,
on
but,
accident, it's still the same effect. It like
yeah, I was just thinking about, if you look at it, at least inside the EU or the European Union, because we are always kind of suffering the spread in between the bonds and the Italian BTPs, right? You could, I mean, if it's real, if it's true that we are actually kind of good on stock of gas for the winter, and on the other side, Germany, it's kind of falling behind. For us, that could be a kind of good leverage because we could say something like, in the next 3, 4, 5 months, we could say, you know what? I don't want you to kill me financially because otherwise I'm not gonna lend you my gas reserves and you're gonna starve in the winter. I might
yeah.
gonna be dead financially, but you're not but you're gonna be dead for real.
Well, that's the thing is that
So,
that's the other way that this thing accelerates is that like you would think that if the energy prices go higher, that would encourage people to sell into those prices, and it does to an extent. But there's a greater incentive for countries to hoard energy right now, right, and not export it to to build up reserves, and that further drives the
Yeah.
price higher, and it can lead to a hyperinflation up until the point, and it really accelerates when people will sell into that raising prices to an extent, but then there comes a moment where they start demanding settlement in a different currency, and that's when it's game over.
Yeah.
And I don't know. I guess I'm just emphasizing this because I think it's really important, and it kind of has, some of the other ideas I've had that are like on the back burner that I've thought were like 10 years away. It's sort of brought them more into focus, and made me think that like, oh, maybe it's not so far away. Like these things are like happening right now.
I think there are a lot of things that we were kind of postulating them, and maybe we were expecting them to happen in
Yeah,
the next 5-10 years, and then we look at the situation right now, and we kind of realize it might be sooner than we expect, and we are
yeah,
not prepared for that.
yeah. Like one thing that I've never understood and is like the way Bitcoin trades with equities, you know? And like I've always
Okay.
thought like, well, there will come a time when, that'll change, right? Because it doesn't make sense on a fundamental level.
Uh-huh.
And I think that might be now, like I think the next credit cycle after this deflationary event may be I think objectively you'll see different behaviors in the market, right? That happens after every credit cycle, right? Different things change. People have different allocations. People
Yeah.
approach the market differently in each cycle. And I think this is the cycle where Bitcoin stops trading with equities because, I think like
Because
for
all the lies will be unveiled, right? Something like that.
yeah, like for all the reasons we mentioned, like I don't think no, like equities aren't an appealing investment, and this won't be an appealing investment in this new cycle. But of course, energy is,
Because
right?
of the business cycle or the growth expectations or whatever
Yeah,
you.
just the
I
way
mean,
that
what's the reasoning?
just the reason that inflation, just the way inflation presses upon,
And so
equities.
yeah, okay, it will erode a lot of gains and earnings that equities could give you, so people would brought to look for alternative investments.
Yeah, exactly, and also on
Okay,
the premise that like inflation is not going away, like it's going to be a sustained
tick. Okay.
issue that faces equities, and but yet then like, so I guess if I was building a portfolio right now, if you sat me down in a room and said, somebody said, all right, here's $1 billion, you got to manage this portfolio, I would, with this, macro case in mind, I would probably want to hold a broad index of commodities as a primary base of the portfolio, and then also gold and Bitcoin and cash. That would
Yeah,
be,
sounds good.
you
I
know,
mean, I would allocate in food. I mean, at least part of it, food, and probably one of the only sectors that I think it's gonna go well, even if really shit hits the fan. But defense stocks, you know.
defense stocks. Yeah, yeah, well, yeah, of course.
So if you would ask me, you got this amount of money, and you need to allocate this money in some sector of the equity market, defense. So
Yeah,
that's the only thing I can figure it's gonna perform well, because you know if the economy goes south, if you got geopolitical issues, if you got wars, firing up across the world, well, everyone will need to take care about his own. So defense, right?
yeah, yeah. That is
And
definitely,
of course
yeah,
food.
and I don't think that's temporary, right? I think that's you know,
Would- I mean, would you agree we are kind of entering another stage of, a secondary Cold War, something like that?
it's not cold anymore, man. It's hot.
Oh, well, I mean, again, I think it's still cold up until the point. it's in between Russia and the US with Ukraine in the middle. I think it's gonna get hot when you're gonna have the US and China actually, fighting for Taiwan. At that point, it's gonna get hot.
Yeah, I mean, so objectively, Europe is approaching World War II level military spending.
Yeah, I mean,
For
even
obvious
Germany kind
reasons,
of
yeah.
state. Yeah,
Uh,
they are they're kind of starting a new races against again to
but
they
but then
want
again,
to
it's like
rearm themselves. Yeah.
how are they going to fight a war without energy? I mean, it doesn't make sense.
Yeah, that's a big issue, and I
Like,
think that's a
I mean,
problem
like it. You
because
see how this
on one
problem
side,
affects
yeah,
everything. You know what I
yeah,
mean? Like,
on one side they want to reestablish their military forces, but on the other side, they are so reliant on Russian gas that they don't have the means to do that.
yeah, I mean, you
So they
can't.
are
If you
kind of
don't have,
stuck in between a rock and a hard place.
you know how much like hydrocarbons it takes to run a real military that can repel Russia. I mean, like they don't, they can't even heat their own people. You know, like it. Uh, yeah, they're, but they are spending a lot on military, and you're right. I don't think that spending is going to go down anytime soon. Like a good
No.
example of how like this kind of like in my mind escalates a lot of the ideas I've had is like going into a commodity type market. You know, I live on the Great Lakes in Chicago, but Chicago's on
Yeah.
Lake Michigan, but there's like
Yeah.
five other, and it's like some of the biggest lakes in the world by far. It's just a huge amount of fresh water. And I've always thought in my mind, I'm like, well, fresh water isn't that valuable now, but if there was ever a time in the world where, fresh water became more scarce, like we're going to be rich. These are going to be the richest cities in the world. And
Like it's kind of funny to some extent. Do you remember the end of the movie The Big Short, right? Where they I mean in the ending titles they were talking about the character that the Brad Pitt kind of take on,
yeah,
and it was just focusing on water. I mean, it's it's like a canary, right? Because some people knew that at a point where you have a war which is all and every year is expanding, in terms of population, so the resources are you know even more scarce. At a point, water will become a problem, and maybe we're there.
yeah, I
I mean,
remember.
again, as I was telling you, I went to the mall today. Half the brand of water they disappeared, and only the more expensive one are there. So
Yeah, I remember the scene from The Big Short where Brad Pitt's character, they had just put on a big trade and made a bunch of money, and those guys start
oh,
dancing.
they are celebrating.
Yeah, and
Yeah.
he's like, "Stop fucking dancing." And
Yeah.
they're like,
Don't
he's
you
like,
know if the economy goes down a little bit, a lot of people dies? Yeah.
yeah, he's like, "I don't care if you make money, just stop fucking dancing."
Yeah.
And that's
And
how I
even
feel right now. I mean, like that's like the long
yeah.
energy trade right now. Like if you're a prudent trader, you want to be long energy, but you also know
Yeah.
that like you're like kind of contributing to an issue that's going to make the world a worse place. So it kind of,
And it's yeah.
you know,
And
if,
it's yeah. I mean, it's fucked up because I do trade euro dollar for the most part, right? And I've been more than happy to short it, but at the same time, I was like, yeah, I made 500, 1K, 2K profits today shorting the euro. So I might be actually happy in the short run, but am I realizing that the most this shit is going down, the worse it's gonna be for my own continent?
yeah,
I was like, oh gee.
what the George Soros trade right now is. You know how he like almost broke the Bank of England.
I do remember that. Yeah, yeah, yeah. With the pound, yeah, I do remember that
Yeah.
he kind of
So
broke the bank. Yeah,
the George Soros play right
but
now is
but
to borrow a shitload of euro denominated debt and buy energy. and then sell it back to the European Union at higher prices. Like
Yeah, because
yeah,
he's kind of betting on the debasement of our own currencies. Yeah.
you're
Okay.
just accelerating the process that's already ongoing.
Yeah.
And
Kind of makes sense. Yeah. I mean, recent events is actually making him right. So
yeah, I mean, but I think it. Yeah, again, we last time we talked about like the Fed intervening in that situation, and I think that's a real possibility. Stepping into
to
the European market and
to
buying,
bail out, yeah, to bail out the euro and the JPY. Yeah.
and then if that's the only way that the European Union can buy energy without hyperinflating their currency, is if the
Yeah,
Fed is buying.
considering that
Yeah,
all the energy commodities are priced in dollars. Yeah. I mean,
that's the only way. Like
yeah.
I've thought about this issue like at a lot of different angles, and I can't see a situation where the euro doesn't hyperinflate without the Fed's intervention.
I mean, conceptually it could work, but at the same time, it could. It's gonna harm the U.S. currency as well because it's gonna debase the dollar even more.
Yeah, but the U.S. will still have the hardest monetary system out of all the currencies. So even though it'll debase the dollar, it won't. It'll still debase it less relatively to other currencies, right?
Yeah, I mean, in relative terms, yeah, I don't know. Yeah, well, I mean, sure as hell you heard about that, but I'm a strong subscriber to the dollar milkshake theory. Yeah, so
Yeah, and that's obviously playing out right now, right?
yeah,
The
exactly.
dollar.
And I mean, if you really go straight to the theory, this is not even the beginning. I mean, we're just seeing, we're just seeing the tip of the iceberg right now. It's not even started. But I mean, I don't know. At that point, we are kind of stepping into the realm of
Well,
crystal
yeah,
ball type of shit. But
I think what
the
he
signs are there.
I think what like I've actually read that theory and I've gone down that rabbit hole, and I think it's very accurate at describing what's happening right now. You know,
Yeah, yeah.
it's very good. I think the problem is if you take it, some people they think about that theory as though it'll play out indefinitely and the Fed won't intervene with it. Like
Yeah.
so I think it's good in the sense that like you know the dollar milkshake theory, and it's got a stupid name. They should have given it a better name. But
Yeah, yeah,
yeah,
I know that.
the stupid
But
theory,
it's funny
stupid.
nonetheless.
Yeah, we got to give it a better name, like the dollar demand shortage theory. I don't know, but that'll play
Yeah.
out. You know, you get this deflationary spiral anytime you get this tightening regime, and that would go on indefinitely until the Fed intervenes. Like if the Fed doesn't intervene, right, there will be a deflationary collapse. Everything will collapse because it's a Ponzi. You can't taper a Ponzi,
Yeah.
right? If
No, no.
But I think the mistake with that theory is to think that the Fed will never intervene. There's obviously an area where they will intervene. Now, who
I
knows
think
where that'll be?
yeah.
But
And I think the area that where they will be brought to intervene, it won't have anything to do with economic reasons, but it would be much more of a geopolitical reason.
yeah, definitely. And that begins the next credit cycle, right? When they step in like that
Yeah. Yeah.
and reflate everything, and it has to do with the global lending markets do have contagion, right? Like people were talking a lot about contagion and the what happened in the crypto space and different lending platforms.
Yeah.
But
Yeah, I saw that. I mean,
the
Celsius, and then yeah, yeah.
the irony though is that crypto really doesn't have contagion like the traditional finance market does, right? Like if you You know, it's like it goes back to the old dilemma. Like, if somebody owes you Bitcoin, how do you get it? You know, if you don't have their
Yeah.
keys, you know, and they owe you Bitcoin, how do you claim it? It's a, you know, and once you think about that question in depth, you realize that the crypto market or the Bitcoin market doesn't suffer from contagion like traditional finance does, right?
Yeah. Yeah. I think so.
Explosions are localized because of that fact, right? Like you know, you know, you just there's not the same level of contagion. And but in
Yeah.
the traditional finance market, you know, like people have all sorts of counterparty risk and cross liabilities, and like, you know, like if one
Yeah.
big firm goes down, like everybody can go down. And of course that, you know, there's just way more systemic risk in the fiat system, and it's you know,
Yeah.
constant. It's like a game of Jenga, right?
Yeah.
As it gets taller, it gets more unstable, and eventually the Jenga game collapses, and then the Fed steps in and prints money.
Yeah.
But I think another carryover of that is that, you know, as the Jenga tower gets higher, and the credit system gets bigger, like in the sovereign debt bubble, then volatility gets bigger too, because the system is more inherently unstable, which is counterintuitive, right? Because like the market cap of different asset classes will go up as the sovereign debt bubble expands, right? Because there's just more units of currency, and people are right in a sense that as the market cap expands, that the you know, things tend to get more liquid and less volatile. But if you look at like the systemic volatility, it's actually more volatile, and that's why like sometimes that, you know, like the Weimar chart from Germany, you know,
Yeah.
like the you know, he's
Yeah.
like,
You know what? It's kind of 8 p.m. We're actually 8:15 p.m. right here, so I need to go prepare some dinner now.
okay, yeah, well, that's
That
good.
was a good chat.
Yeah, good chatting with you, man.
Yeah, absolutely, as usual. So, take care. Have a nice Sunday. Have a nice weekend.
Yep, peace out.
Yeah, ciao.